when there's a giant wave of liquidation of stocks, highly leveraged stocks, and all the speculation that went along with that, like triple leverage ETFs, which are at an all-time record high. People have no idea. I've asked people, I said, why do you use the triple leverage? Do you know that if the Dow goes up 10%, the triple leverage will not go up 30% unless it's in one day, but the markets go up and down. And so you're always behind the curve in these things. These are scams, but the greedy part-time investor goes for those. So we have all this huge speculation, all with leverage. And I've been warning here for the last several months. I said, if you have a margin account, you may lose your house. And people don't realize that when you sign the margin agreement, they can come and get your house if you cannot meet the margin call in a few hours.
Yeah.
After the 87 crash, we called that crash on the button. At that time, we had managed accounts. We were 77% in cash. And some of the people, they said, what am I paying you for? To be in money market funds, and so on. And then came the crash, down 22.6% down in one day on the Dow Jones Industrial. So it happened. It was because of the leverage that was implied in the futures markets. So you can catch these things if you know where to look. Everyone looks in the wrong direction. They look at earnings, they look at dividends, they look at buybacks, and all this stuff. It doesn't matter. This is going to be a liquidation. We've had the highest leverage in the history of the U.S. And it takes a long time until all that leverage is taken out and stocks go down to their normal levels. Look at the Bitcoin now. I mean, it's a speculative frenzy, a digital item. You pay $100,000 here a few weeks ago, and you get a so-called Bitcoin. But it's not a coin. That's really a fraud to call that a coin. All you get is a key. It's a computer entry. You get good money that you can buy as a down payment for a house, or you buy yourself a new Mercedes, and they sent you a number that says, yeah, you own this Bitcoin. Now, if that disappears, like we just had another hack, $1.5 billion for crypto was wiped out in the hack, where do you go to complain? Where do you go? Where's the complaint department? Nobody. According to U.S. law, only the U.S. Treasury can make money. And Bitcoin is private. So at any time, you can wake up in the morning and the U.S. Treasury has said, okay, all the cryptos are illegal currency, and suddenly they're worth zero. People don't know what they're investing. For example, Alibaba. I've written about Alibaba. We really had a very big gain recently, so basically short covering, in our opinion. So people who buy don't know that they're not buying Alibaba China. They're buying a Cayman Island entity called the VIE that has zero assets. So this is what they're buying. And this is not how you want to invest. And that IPO did not disclose what the profit sharing. It only has a profit sharing agreement with Alibaba in China. But nowhere is it written what that profit sharing is. Is it 1090? Is it 50-50? What is it? What is the profit sharing? Why didn't that have to be disclosed on the IPO? Where everybody's looking, it's usually the opposite of where they should be looking. If everybody's expecting inflation, worried about inflation, you want to look at the other side, which is deflation. The masses are always wrong. That's why the masses are poor. They don't have any money. And so you want to look at where nobody else is looking. I'm not saying it's a long bear market. It's going to be a relatively short bear market, but it's going to be very, very sharp. And that is what's going to be the killer. Everybody says, oh, I can hold on for a year, and go through the valley. No, at the bottom, people lose their courage and they sell, which is the game plan for Wall Street. The average investor has to sell at the bargain, where the insiders then pick up the bargain. It's human nature. The markets are a function of human emotions, not of valuations. And we've been saying that here for the last year. The biggest gains are in stocks that have no earnings or sky-high PE ratios, like 500 or 900 to 1, like the cyber security stocks and so on. Can you imagine buying a stock at PE ratio of 900 or 800 and so on? And people think it's a bargain. If it's a stock, I'll give that example. If a stock has a PE of 500, it'll take you 500 years of earnings just to get your own money back. I don't think you're going to live that long. I like gold, especially in this environment, but not for the near term. There's going to be an upset again because a lot of money has gone into it. But this time, what we didn't see is the retail investor going into gold. The retail investor stood out, which I consider a positive. And we made a forecast in 1982, and gold had gone up in 1980 up to, it was $800 an ounce. And then it started dropping. We gave all-time sell signal at 694 when it dropped through that level, said, okay, we're in a bear market in gold now. It's going to go at least down to 400 and probably lower than that. It went down to 250, actually. And we said the bear market in gold is going to last 20 years according to our cycle study. And for the cycle study, we had to go back to England for the first 200 years because, U.S. didn't have a gold market at that time. So the interesting thing is that 20-year bear market is going to be followed by a 30-year bull market. And we have no idea what would cause a 30-year bull market. The 20-year bull market ended in exactly 20 years later in the year 2000. That was the bottom. Nobody wanted to believe it in 1982 when we said that because everybody was still waiting for $3,000 on gold. So 2001 is this bull market started. So 30 years, if the cycles are still correct, it could potentially last till year 2030. And usually the final part of a bull market like that is the most rewarding one. Let's face it, gold is the only real money. It cannot be manufactured by the printing press. My forecast is that eventually all the cryptos will be selling at zero. That's a heck of a forecast, and a lot of people will shake their heads because they believe it's so. The only thing that could change that is for some reason the U.S. Treasury would say, okay, we're going to nationalize the Bitcoin. Now it's going to be the Federal Reserve digital currency, central bank digital currencies. This is where we're going internationally. All the central banks are in a pickle because the debt is too high. They cannot print enough money, which was the handicap in the German hyperinflation in the 1920s. They didn't have enough printing presses. So with the computer, of course, you could manufacture as much money as you want to. And so I think there's always the danger that the U.S. Treasury will say it is an illegal currency. The government has no benefit from that. It right. competes with their own currency, which they are manufacturing. In the last several years, the Federal Reserve has manufactured $9 trillion of money out of thin air. They can't do that with Bitcoin. Bitcoin, what is it, 21 million or something like that? It's limited how much they can manufacture. The central banks do not want anything that's limited. I would not take the risk. Investors have a different mindset. Instead of just focusing where I can make the most money, the first focus should be what has the lower risk. Risk control is so important. You don't want to lose your money. That's much more important than losing an opportunity to make money. Let's face it, the war industry, as I call it, it's not defense. Who are we defending ourselves against? Is Cuba going to invade us? Is Ukraine going to invade us? No, it's a war industry. War industry is very profitable. And that's why we always have had wars. So this time we finally have a peace president. It's the first time in many, many years. Okay, the Zelensky type of people, they want war because it's so profitable. Can you imagine what their bank accounts must look like? So the war industry has made huge amounts of money. We all know the example of toilet seat cost $10,000, and this kind of stuff. Now we're finding out the transgender operations in Honduras are being financed by U.S. taxpayers, all this kind of stuff. Sesame Street in Iraq is being financed by the U.S. taxpayer, $20 million. So all this graft and corruption is going to disappear. That's going to reduce profits. Peace will also reduce profits. Everybody talks about the tariffs. The tariffs are inflationary. No, it's really terrible to hear PhD economists saying that. In economics, you learn that inflation is a function of money. Okay, that's what it is. It's not price increases. Price increases are one of the effects of this huge money production. But it's not tariffs that raise prices because they add a tax to it. But let's face it, these tariffs are wonderful. Trump, I think, said it. It's the most wonderful word in the English dictionary or something like that, because he has read history. If you read economic history of the world, until 1913, that is how all countries were financing the expense of running a government. Tariffs was that there was no income tax. They didn't know how to do an income tax because they didn't have computers. I've said for decades that setting of interest rates should not be part of what the Federal Reserve should do. They can't do it. They can't even forecast the economy. They're totally inept at setting interest rates. I mean, it's like asking the weatherman who's just forecasting the weather to control the weather. Why? The Federal Reserve cannot control interest rates at the proper levels. The free market can do that much better. Market forces, demand, supply. That is what should be setting interest rates. The Fed created $8 to $9 trillion over the last 5 years of money that didn't exist, out of the heavens. Their mission was, we have to control interest rates. Well, what a terrible job they did. They kept interest rates, the Fed funds rate at zero for several years. Why? The natural level of interest rates is not 0%. Would you lend out your money at 0% to anyone? Now they're talking, could we have a recession? Heck, the recession started a year ago. It was just being hidden by all the false numbers coming out of Washington. The Bureau of Labor Statistics, we call it Bureau of Lying Statistics. That's what it is. All their statistics were phony, and we showed it. We didn't just make that statement. Here, from their own website, like this 1 month, they had a gain of 514,000 new jobs. They said that's impossible for January. So we went to their own website, and on the website, it showed the real number. 2.5 million job losses that month. That was January 2023. So they turned the 2.5 million job loss into 500,000 job gain. How? Seasonal adjustments. We never look at the headline numbers, the seasonally adjusted numbers. And the economists have asked the BLS, how do you do this seasonal adjustment? They have never answered that question. But I have a suspicion how they do it. The BLS calls the White House economist and said, what number would you like to have for job gains? That's it. Their numbers are totally out. And now you have to have the readjustment. All the false bullish numbers under Biden now have to be adjusted to reality. And that is what's going to produce recessionary numbers. The Atlanta Fed, a few days ago, issued numbers. A bullish, optimistic forecast for the first quarter this year was for a gain in GDP. Now they revised that to a loss. And a few days later, they revised the decline in GDP even further. So now we have a huge decline in their forecast number from positive growth to big negative growth. In the first quarter, that's the quarter we are in. So they have to look at these numbers, the real numbers, not what they tell you on TV. And I always tell people, if you're emotional and very easy to convince, don't turn your TV on.